On the 11th of November, the Office of Tax Simplification, somewhat earlier than expected, issued the first of what will be 2 reports on the reform of capital gains tax. The second report, which we expect sometime in the new year, will deal with the technical and administrative issues around capital gains tax. This first report deals with the areas where the current rules affect and distort behaviours, and also where the current rules don't give effect to the policy intent for capital gains tax. This first report breaks down into 4 main areas. The first is rates and boundaries. The second is the annual exempt amount. The third is the interaction with inheritance tax, capital taxation. And the fourth is business reliefs. First, rates and boundaries. The Office of Tax Simplification suggested that there should either be alignment of the taxation of capital gains with the taxation of income, so basically taxing capital gains at income tax rates, or if there's no alignment, measures should be introduced to deal with the areas of disparity between income tax and capital gains tax, basically having a look at the boundaries. So if there were to be alignment, that means taxing capital gains at income tax rates, then the OTS suggests that some form of indexation relief should be introduced so that only real gains are subject to tax. If there is no alignment of rates, then there should be no reliance on the taxpayer's income in determining the rate of tax that's payable on capital gains. The OTS also suggests measures to prevent the disparity in the taxation of capital gains and income, and in particular suggest a review of remuneration in shares and taxing more of the accumulated income inside private companies that eventually is removed as a capital gain subject to lower rates of tax. The second area suggested for review is the annual exempt amount, standing currently at £12,300. The OTS suggests that if this is meant to be a de minimis level, it's set too high because it does affect the behaviours of individuals. Evidence shows that in 2017, around 50,000 people made gains of just below the annual exempt amount, suggesting that people do behave differently in the year to ensure that they at least use that CGT exemption to make disposals they wouldn't have otherwise have made. You'll all be familiar with that, making a disposal to use the annual exemption because you can't carry it forward. Of course, making the disposal in a way that doesn't trigger the anti-avoidance provisions known as the bed and breakfast provisions. The OTS suggests that if the £12,300 annual exempt amount were reduced to £5,000, you would double the number of taxpayers. They do, however, accept that this would increase the administrative burden on HMRC. The third area suggested for reform by the OTS is in connection with capital transfers, the interaction with inheritance tax. The OTS suggests that there should be no rebasing of value for capital gains tax on death. Now, they suggested this in relation to inheritance tax in their earlier report on IHT reform, but only in relation to assets that passed free of inheritance tax. They go a little further in this report, suggesting that maybe HMRC, the government, should look at no rebasing for any assets that pass on death. Now, aligned to that, they also say that perhaps if that is implemented, the government should look at revaluing all assets that were owned before 2000 to the year 2000 value. So that's a suggestion that they make. Encouragingly, the OTS have also suggested that maybe there should be holdover relief applied to all gifts during lifetime, not just gifts made into discretionary trust or gifts of business assets. The fourth area suggested for reform is business reliefs. In effect, old-style entrepreneur relief, new-style business assets disposal relief. The challenge here made by the OTS is whether this relief does its job. Is this the kind of relief, i.e. back-end relief when you make a disposal of assets, what's really needed to encourage risk-taking and business building? So they throw that out there as a challenge, but say that if business assets disposal relief is retained, then there should be some modifications made to it. 3, they suggest in particular. 1, the size of the shareholding to qualify for business assets disposal relief should be increased to 25%. The holding period should be longer, so it should be 10 years minimum. And actually, so the third, there should also be maybe an age requirement, which takes us back to the days when we used to have, remember this, retirement relief. So that's all been thrown out there for consideration. Now, it's important to remember that everything I've just talked about are proposals made, recommendations for consideration made by the Office of Tax Simplification. They are not official government policy, but the Chancellor did ask the OTS to have a look at capital gains tax. So one could expect quite reasonably that the government will actually consider these proposals. However, how many of them actually find their way through to legislation remains to be seen. If any of them did, then that could have a fairly material, maybe even profound effect on some financial planning strategies. But we'll just have to wait and see, and probably wait and see until into the new year. We will, of course, be keeping you fully up to date with developments in TechLink.